Hi, Warriors. Markets, stock markets closed today. FX still moving, metal still moving. So only stocks are acknowledging the day of mourning. Okay, so let's talk about a few things. How are you, Ingmar and Mike and Paul, Andrew, Ryan, Ryan, Bran? Welcome back, Blake, Glenn, Patrick, James. Okay. So I want to start with EG because I really think that this is not just telling us something short term, but longer term coming out of this wedge here. Okay. And start with Ryan. So, we've had this breakout and, when the euro was making new lows and even retested the lows, we weren't close. So, what I put forward that the EG would turn before the euro did is exactly what happened. So this is confirmation. So even if, say, for example, I know we had a retest of the low, say we make one more low here, EG is not going to confirm it. And that's why I, continue to look for a low. Like I've been saying, lows don't always happen on one candle. You have to go through an accumulation phase. Just like at tops, you have to distribute. Ryan, how are you today, buddy?
Yeah, I'm all good, mate. How are you?
Good. I wanted to ask you what was behind the sell-off in yen. Was it the bond auction last night? Because 10 years off a little bit here too.
Yeah, I think we're just seeing maybe a bit of profit taking coming in.
Yeah,
Yields just edging down a bit. As you said, it's a holiday. No one's going to push the envelope today, being the occasion. It's not as if it's collapsing out of bed. The dollar yen, so I still think it's going to stay there or thereabouts. And yeah, maybe yields are just, as I say, seeing just a bit of profit taking after the run higher.
okay. And whatever it does today can change in a heartbeat tomorrow.
Yeah, well, it's big day tomorrow, isn't it? We've got
Yeah,
NFP,
right.
Canadian jobs.
Yeah,
And, I think this has still been the first week of the new year. And as usual, it's full of fun and games at the start of it, particularly in the UK. I think from next week, maybe we'll start to get some clarity, seeing if some of these moves that we've seen this week continue, if that's going to be the trends or, everyone's finished pushing their chips around the table and something else happens. So,
okay.
yeah.
I know there's a lot of negativity about gold, but sure looks good to me, man. I mean, why can't we blow to new highs? Silver may not, but gold looks like that's where it's going. And also, so if yields are peaking and the yen is peaking, that takes some of even though that didn't really hurt gold that much. When you think about it, even silver performed pretty good with as strong as the dollar's been the last few weeks. So, what are you thinking there?
That's that's the thing I keep coming back to on gold. We've just come through the December FOMC. The Fed potentially going on pause. We've got
Yeah,
China coming back in the market. We've got everything going on in yields, and yeah, gold's in a little bit of an uptrend from sort of the end of the last couple of weeks of the year. But over the last couple of months, it's still going sideways. You would think
it
with everything
is.
going on, it would be either making new highs or coming down towards 2,500 or something, but it's not. So I think you've probably got to go onto a shorter term time frame to trade this one in the interim. Onto an hourly, we've got a bit of a level here at 26.70 that we're breaking. Next one's 26.85. So there's enough short term levels to play around with until we get a real sense of direction. But if we're up back above 26.85 and those two highs just above 27, then yeah, we're probably heading to the highs.
Yeah. Um, looks like a symmetrical
Yeah,
triangle, right?
nice
So,
wedge.
yeah. So, The measured move is going to be this from whichever way it comes out.
Yeah.
But to me, it looks like an upside breakout is more likely at
Yeah.
this stage because otherwise with the rally to 109 in the Dixie, we should have all, unless we're going 111, 112, that could do it too.
Yeah.
But I still contend that we're starting to distribute up here in the dollar. And on the daily, the last high up here, um, that was over 80. Now that we had that, even though we just had, a little, you know, pull back and rally to new highs, it was enough so that if we make a new high, this time the RSI most likely won't go over 7. And on the 4 hour, you may end up with some divergence at new highs too. So
Yeah.
I don't know what's a whisper number, and I know we have other people here today. What's a whisper number for tomorrow so I could get my vote in? Everyone, get your vote in for the NFP
Yeah.
tomorrow.
Well, I think Blake's going to put the link up, or I can put the link up for that
Okay.
one.
All right.
Doing it
What are we
now.
expecting? 154,000, I think it is tomorrow.
Okay. Okay.
Which is there or thereabouts. Oh no, we're up to
Yeah.
164,000 now, expected. So that's been revised a touch higher than it was earlier this week.
Yeah.
But I think you're right on the dollar. I think tomorrow's going to be key. Okay,
Yeah.
if we get a decent number, outside of a gangbusters 300k, 250k, or whatever, if we get a decent number and Dixie can't break those highs, I
Yeah.
think that's when you've got to ask a serious question, because that will probably mean a low in the euro, a bit of a bottom forming, and maybe we're over this phase of the dollar rally that we've seen.
That's a good observation because the euro hasn't made a new low as cables made two consecutive new lows, and
Yeah,
now we have Aussie finally making a low here.
it
Aussie's
tried.
diverging. Well, I mean, it isn't. I mean, it's diverging. It took out this low
Yeah,
right here, so we
took
have
out.
a new low.
Yeah, took out that low, held the
Yeah.
2022 low, I think, if you go back a
Okay.
bit further. So that was the 20, I think it's either 2022 or 2023 low, was a bit of a line in the sand. If that went, then we're bound for 60. But the fact that it held that and then bounced back pretty quickly, yeah. So
Oh,
even
this is really looking good on the. I don't care if they take another 100 out of it. If they do, I'm buying it. Should probably have a piece on now, but I'm going to try and be perfect. I won't do anything
do you
in
want some of
front of the
mine?
NFP. Huh?
Do you want some of mine? I got in 82 after we failed on that low today.
Okay.
So
Okay.
you're
But
I'll
I
give
mean,
you a bit for Christmas.
it looks good. I mean, the RSI picture on that looks good. Looks
But
good on Euro.
we've got a bit of
Not
divergence.
cable.
Right, cable's all out on its own because of what's going on
Right.
in the UK with UK yields. But
Yeah.
as you say, it's breaking. Big levels for cable, 121 to 120. I'm not interested in anything in between. And while it
Okay.
stays below 123, particularly, it remains bearish, more so below 125. But Euro, it tried to have a go down towards its low
Yeah.
yesterday, couldn't do it.
Yeah. So
That's
we
going
have
to
a
be
shift. So I mean, you could also be looking to buy breaks in EG anytime you get a move. I think we're going 86, and maybe that's not all. If we're going to embark on a bear phase in the dollar, a bull phase in euro, I believe euro. This is the way classically it should be, that euro would lead the way, and EG would move higher during a dollar decline.
Yeah,
So right,
but as this is all pound led, Europe's in pretty much the same situation fundamentally as the UK,
yeah,
if not a bit worse. I still think that the main thing for the ECB this year, and the early part of this year, is that they're going to be taking rates lower than they expect, and that's going to have a big impact on the euro. But
okay. Are you looking for subpar? Because I said weeks ago I want to hear people starting to talk about under parity. On CNBC, I heard it from a well-respected hedge macro guy. He says,
yeah,
I want to go the other way. This is what he said. I want to go the other way. because all my clients are going strong dollar, strong dollar, strong dollar. But I can't because of how things look. That the
Yeah.
dollar move will continue with higher yields. Um, what do you think?
Yeah, well, it's all going to come down to what His Majesty does when he gets in, doesn't he? And how the
Oh,
economy
yeah,
goes. If the economy keeps going as it is, irrespective of Trump and what he does, and Europe remains in the doldrums, Germany remains in a mess, then yeah, euro's going down. Euro's going down parity, maybe even below, probably
yeah,
below.
yeah,
And if
probably.
they have to cut rates. But we're all data dependent at the moment, so that's my outlook for the early part of this year. That Europe's still going to suffer more than the US, and that means the euro lower. But I'm going to watch the data like everyone else, and
Do you
I
know?
was
Do you know
hoping for.
offhand? Do you know offhand any sentiment readings in euro? I have to think that most people hate it.
Generally, most people hate the euro. It's a failed project. It's this, it's that, and the other.
Yeah,
Just as
yeah.
much as everyone's bearish on the pound.
Okay.
I don't assign to that sort of stuff. I watch what the price is doing and what the
Yeah.
fundamentals are doing, and I
And
make my
everybody loves the
decision
dollar,
from that.
right? And hello, everybody, by the way.
Hey, Stell, what's the DSI in Dixie?
Oh,
In
I need
the
to check that.
80s?
I don't
Oh,
remember,
okay.
but it's high
All right.
80s, yeah.
High
But
80s. Okay.
but
It's 81, I
oh, it's
believe.
81. Okay.
All right.
Did you guys see the tweet by CNBC about 45 minutes ago? The title was Elon Musk says Doge, so the Department of Government Efficiency, probably won't find 2 trillion in federal budget cuts. So they're already backtracking stuff they've been saying, and the market's gone ahead and priced so much for Trump's second
Yeah.
term. I feel nervous about the dollar and about yields, about everything. But anyway, just wanted to point that out in case you guys hadn't seen it.
Oh, okay. Yeah. All right. Yeah, there's going to be a lot of that. You
Yeah.
know,
Well,
uh, they
also,
say everything in the campaign.
yeah,
Governing and campaigning are two different things.
exactly. Also, you talked about the pound and how it's been pounded, pun intended, because of yields going higher and everybody saying, "Oh, bond vigilantes are going to crush yields, etc." And everybody seems to forget who the biggest buyer of bonds is, and this story just gets repeated over and over again, especially after 2008. And the biggest buyer is the government, the central bank, right? So, and they're going to step in. They will have to step in if things get worse. People talking about 8 and 9, 10% yields in the guilds. It will never happen. They will never allow that to happen. Anyway, just another
You
thing which
like
has.
this? How about silver or gold action still? You like it?
Yeah, well, for the subscribers who are in the chat room, they will know I got some silver in at 29.75. What was it, a couple of weeks ago,
Yeah.
and platinum at 9.20. Of
Yeah,
course, I
you
still have.
bought the bottom, near the
Yeah, it
bottom
wasn't the
in
bottom
platinum.
exactly. No, it wasn't. But
Oh yeah.
I never get tops and bottoms. I'm not that good. But I got both those in, and I still have my core silver long from 2310, which I'm really not touching. Um, I mean, they're looking good. And as you guys said, gold, in spite of rising yields, has
Right.
been trading sideways, same as it did from 2022 when the central bank started hiking like crazy. Again, sideways, broad consolidation. I just don't see how we can get any meaningful pullback in the metals, especially gold, which is much less volatile than silver.
And
So I'm
just take
still,
a quick, hey
yeah, go
guys,
on.
just take,
Palladium. Go
oh,
ahead. Go
I
ahead.
was just going to say, take a quick look at copper. It is ripping right
Yes.
now, almost at the 200-day DMA right now.
All right, Blake, I'm going to give you the charts. Welcome back. I hope you had a great time and you got out of California in time.
Yeah, looks like I got out on the nick of time. How's your
I'm
how
fires near
is
me.
your are you getting a lot of the smoke there?
Probably.
No, I mean where you're at. I mean, I was just wondering if you're getting some of the
No,
backlash with all
it's
the.
still, it was Santa Ana's blowout towards the ocean.
Got
So
it.
the smoke's going, and that's why it was a weird fire, because normally, it would burn going east, and the winds were from, the east pushing it west. people tried to escape to the beach, and there are coastline stuff that's gone. It went to the coastline.
Yeah, it's wild. And I feel horrible for the people out there, and I know anyway, it's a really sad situation, and we managed to get out just fine. It was just there's a
you look like
lot
you're
of
having fun on that boat.
Oh yeah, we had a great time, and I spent a lot of time with my father, which is good. It was needed.
Oh,
But
wow.
anyway, it's nice to be back, and and when I left, there was plenty of volatility, and we we had obviously some Trump headlines to kick off the week, which really I don't know if it's put in a top in the dollar. We've been discussing over the last couple of days that this could be, wave 5 completed. I mean, but the dollar is right back near its highs again. But I think it's all about tomorrow, right? It's all about the jobs data tomorrow, and then obviously CPI next week. So that's really where the dollar is going to, continue higher. It tested the channel support. It tested the 107, whatever that was, 107.80, I think, breakout area. It tested that this week, and we held it fine. And since then, we've seen the dollar bounce back. And I know you guys have been talking about this move in sterling, and sterling just hit the 38% retracement. This is the Liz Truss moment, and this is when we hit parity basically to the dollar, and we basically hit the 38% retracement today. Also, potentially put in a false breakdown, below these lows. We'll see about that. But the thing that's got me thinking, and Dale, you were talking about euro sterling, which has come out of the wedge. We actually hit the 161% extension today of the last. That was the last push lower in sterling, or in the euro sterling, euro pound. And we hit the 161% extension today, and you can see we're coming off of that level right now. But I did want to point out the gilt yields, which I know you guys were talking about earlier. I mean, we're in breakout territory. So, this is the question that I have, and this is maybe more for Ryan and Stelios here. And by the way, I don't know if you guys have seen it, but Leandro is here, so I don't know if he's had a chance to speak, but we're going to bring him in for a second in just a few minutes. But I wanted to ask Stelios and Ryan about this move in gilt yields. I mean, what do you make of it? And Stelios, you'd mentioned there's no way that this is going to continue, but does the Bank of England have to step in? What's going to happen here?
Well, they have to. They will, I think. It's already. I saw there was a chart which is showing government bond liquidity and gilt liquidity is really bad at the moment. One thing's for sure: if this continues, and of course it can continue a bit further, we could edge towards 5%. There will be, they will need to do something. Let's leave it at that. I don't know exactly what, but and it doesn't mean they actually have to go in markets. Even just saying something will ease the pressure. So expect something. And I think there's somebody talking. Who is it? Ryan?
Yeah, Sarah Breeden. She's deputy governor of the F.A.C.E, which is the financial stability part of the bank, is speaking at 4 o'clock. So she might choose to throw a few lines. But we've already had the Treasury talking in Parliament, getting questioned on it, and they basically just brushed it under the rug, saying markets are still orderly, and that there's no need for the finance minister to step in with any intervention. So they're just ignoring it, head in the sand, head up their asses, whatever way you want to call it. But yeah, the risk is growing for two things. One, we get some verbal intervention, and the Bank of England have already got a program in place that went in when we had this in September 22. So the first thing I want to say is we are not in the same place as back then. Okay,
right.
That yield move kicked off was a whole other different reason to what's happening now. However, what's happening now is that the government and the Chancellor is under pressure because these rising yields are basically eating all her headroom, fiscal headroom that she's got, and is going to make it tougher for her to put through the prior budget because of these higher borrowing costs. So I would expect the Bailey maybe, or Breeden to pop up and just give it a bit of verbal warning. But also this is the UK, and sometimes when the snowball starts rolling, it can tip over. So I wouldn't rule out any shenanigans if this continues to happen with yields, and maybe we get a little mini flash crash again.
All right. Well, it does looks ominous at this point for gilt. So it's definitely definitely worth watching here. So speaking of yields, here's the 10-year yield, and we basically hit, and I'm going to go over to the daily chart here. We basically hit the 161% extension yesterday. You look at, I know bond market's going to close early today. In observation of the 39th U.S. president, Jimmy Carter, who passed away. He passed away at the age of 100. So great life he had lived, but the bond market's going to close a little early. But if you look at this setup right here, the way yields are moving, this is actually a shooting star, or a type of reversal. Now it doesn't mean a whole lot right now, but if the jobs report tomorrow comes in worse than expected and yields drop, that's going to have a little bit more lasting impact, I think. So tomorrow we are expected, I know you guys talked a little bit about the jobs report. The market's looking for about 150,000 jobs. What else is important with that jobs number, Ryan, would you say? Are you going to be paying attention to the the unemployment rate? I mean, because it's supposed to be at 4.2%, right?
Yeah, exactly. Market's always going to, move first on the headline number. If it's there or thereabouts, around expectations, somewhere 100K to 200K, then everything's fine and dandy, and you get a bigger move outside of that range. But the unemployment rate will be important. If it stays as it is, then, no harm, no foul. We continue. It shouldn't be too much for the dollar. We might see a little bit of a sell-off, but the rest of it will keep the jobs market ticking along nicely. Obviously, anything better, 4.1, 4.0. And we'll see this yield move continuing and the dollar remaining firm.
Okay. And I just wanted to say that that everybody's going to be looking at, because it's obviously a concern right now. Average hourly earnings is supposed to actually dip a little bit to 0.3% from 0.4% on the last reading. So, if we don't get a dip in that could be something very supportive of the dollar tomorrow. But we'll have those discussions tomorrow. Make sure you are here for the non-farm payroll. We've been covering it live. Dale, every non-farm payroll for the last 8 years. So make sure you all are around for that. Hey, I like I said, I see him sneaking in. For those of you that don't know, Leandro is with us, who is our Spanish analyst. Good morning, Leandro.
Hey, hello everyone. Good morning. How are you all?
Hey, good to hear from you. I wanted to ask you, and it's not, you're not obligated to do this, but did you want to show any charts and any currencies that are, on your radar?
Yes. Can I share my screen a little?
You absolutely can. So let me go ahead and stop sharing there. There you go.
Thank you. Please let me know if you are watching my screen.
Yes, we can see it.
Perfect. I would like to talk about the euro US dollar because I am still looking for that higher lows. But for me now we have a pretty nice small horizontal channel here. So now US dollar is below there, but for me the best point, the best resistance area, I would like tomorrow a bounce. I unexpected. I would like to have a bounce, tomorrow.
Yeah.
F.P.E. This for me should be great to try to a new move to the downside. I am still looking for US dollar, a strong US dollar, as that the USD, the XY is trying to break again new resistance area. Maybe this is not the best area to take a loan in US dollar. I would prefer a move to the a very big support like this one, in my opinion, but should be perfect to me to try to a new move in the upside again.
Okay, and so you're just waiting for a pullback in the dollar to buy it.
Exactly. If tomorrow we see or I see a dip in the dollar, I will try to pick the US dollar up.
Okay. All right. So where would be the price in the euro that you would look to short?
The price for me to short US dollar should be around the 105 area. This area.
Oh, okay.
This is
Oh, you think we could get all the way back up there then?
I don't know if US dollar is going to go there tomorrow, but the question is that I am ready just in case the US dollar get this area. That's all. So for me, it's really interesting to control my risk area. As you see, support and resistance in the historical prices. So for me, it's a really pretty nice area to control my risk. At the end, is what we had to do to control the risk before start a new trade.
Yeah, no, that makes a lot of sense. And one of the reasons why that you've been around for so long, and I want to mention to everybody that, Leandro has been working with us for the last, I want to say, probably 5, 6, 7 years, something like that. I've known Leandro, one of the very first people that I followed on Twitter. And he's met Greg Michalowski over at Forex Live in person, and so we have this mutual friendship, and we've known each other for a while, especially on social media. And one of the reasons why Leandro has been around for so long is he is really good at risk managing, and that speaks about his longevity as a trader. So that should be saying something.
He's good on the guitar as well.
Yes, he is. He is. Hey, anything else that you wanted to show us before we get out of here and turn it back over to Dale?
Okay, nothing. It's only to be ready for tomorrow. That is, I think it will be a very great day tomorrow. Let's see what happens.
Yeah. Tomorrow will be a great day, and I'm gonna just and I want to thank you, Leandro, for spending a little bit of time with us, and coming here. And if you are in the Forex Analytics community, or you want to get the Spanish version of Forex Analytics, make sure you get with Leandro. We have Forex Analytics. It's also in a Spanish version. He's also in the Spanish chat room in the Forex Analytics community. And so, make sure you jump in there and mingle a little bit with Leandro as well. So nice to have you here, buddy. Now, speaking of which, I was in the chat room a little bit earlier, and I want to talk about the going back to the sterling, and I want to talk a little bit about this this cable where we're at the big long-term 38% retracement, and like I said, possible false breakdown. I wouldn't necessarily want to be bullish sterling right at this moment, but this is a bit of a respecting the long-term trend, bit of a false breakdown. Some of the downside pressure is getting taken off right now. So I'm actually keeping a really close eye on gilt yields. And, I even have an alarm set up here. If we start breaking back below 478, I believe is the number where I'm looking, but the 478 level right here, 477, that's where, you start seeing probably a bit of a broader recovery in sterling, where everybody goes, "Oh crap! I chased that thing lower," and now you might get some late shorts, getting squeezed out. So keep an eye on sterling today. You have to ask, did the macro backdrop really change a whole lot overnight or the last couple of days to justify this big move? And this has been a really big move. I mean, we've gone from 125. Almost 126 all the way down to 120, 3. I mean, that's a pretty big move over the last couple of days. So Ryan, you have any last minute comments that you want to make about this sterling move?
Yeah, you just got to keep an eye on those yields, particularly the 30-year as well, because that's the one that's really been causing all the problems. But yeah, down here, I'm not really keen on catching the knife until at least maybe 121, 120s if we get there, because that's the big old level.
That's what you're looking at. Okay. And that's going to be some of these levels down here. I want to, I know you guys were talking about the divergent relative strength for the Aussie and the Kiwi, but I want to just show you how important these levels are. And in Europe today, in European trade, when I was sleeping, we got a little false breakdown in the Aussie dollar, false breakdown in the Kiwi dollar as well. And again, if you were in the Forex Analytics chat room, that was my first observation when I woke up. I'm like, possible false breakdown in the Kiwi and the Aussie. You know, we've seen a recovery in both of those this morning. And I mean, that was only 10 pips ago. So there could be some further recovery, especially if we see some dollar weakness seep into the market today. So just a little heads up. Again, if you were in the Forex Analytics chat room, you're already well aware of that, you know, over the last hour and a half. So Stelios, any last minute comments that you have? Oh, he already left. Dale, I'm going to pass it back over to you because do you have a guest today?
No, I didn't know if we were going to be open, so I moved Patrick to tomorrow.
Okay, got it. Well, you know, today, even though futures are, you know, going to be closing and the bond market's going to be closing, the FX market is obviously, you know, kicking and screaming and giving us some volatility. So, you know, I will be around for the F.A.C.E show, or excuse me, for the Morning Edge. So if you are a Forex Analytics subscriber, in about 45 minutes, I will be taking you through you know, all the analysis of all these, you know, major currencies. We're going to go through them and, you know, get our key levels. Actually, you know, we end up covering a lot of other things. Steve is there with me, and Steve helped me this week as far as being on the Morning Edge all week long. And depending on the day, we might even stick around for the daily roundup. So I'm going to leave it with you, Dale, and I want to thank everybody for joining us today on this observation day of President Carter.
Okay, and I plan on observing it the rest of the day. And you know what? This is not a political statement, but does anyone else feel the irony of Carter, who is being buried, and the new president we have, and that their personalities are exactly, in many ways, the way they live, the opposite? So you know, it's kind of a, you know, his presidency may not have been successful, but I'm just talking about the things that, you know, Americans and people all over the world hold in high esteem. And we all want to be humanitarians, but we talk about it, we read about it, but how many of us really spend our lives going out there and building houses for people and, you know, really affecting the world, and not just delegating to contractors, but getting out there and doing it again, with yourself, with your wife, wife that you've been with your whole life. So, in a way, it almost feels like things that used to be important are being buried with President Carter today. I'm hoping for, you know, resurrection of what we used to consider important, and there were more things than money. I know that's what we do here, but that's what we do. That's not who we are. And with that being said, don't just count your pips, count your blessings. Trade the NFP live with us tomorrow. It's going to be a great day. Maybe some inflection points happen here. So I'm looking forward to that, and want to thank everyone for supporting us. If you want to say thank you, join. And team, thanks very much for backing me up. Everyone came this week, Blake, Nick, everyone, to, you know,
Yeah, it was awesome.
make the shows great. To Ryan,
Want to
every
thank
day.
everybody. Thank the team.
Ryan, you look for that tweet I sent out about you yesterday on your Forex Flow stream show.
Yeah, I did, mate. I blew you a kiss on it.
Oh, I got a kiss. Oh God, I'm gonna have to go look for it. Anyway, Forex Kiss Hunter. All right. Anyway, guys, see you tomorrow. Glad to have you back, Blake.
Thank you, Coach. It's nice to be back, and I appreciate you guys stepping up all week so I can enjoy some time with my my family and my 86-year-old cousin who's unfortunately got Parkinson's. He used to be, by the way, Dale, you'd appreciate this. He was the ambassador of public relations for the Hotel Dell back in the 80s. Yeah.
Oh, wow.
Yeah, he's met so many celebrities over the years.
Yeah.
He's just such a unique person, and I you know, it's one of those trips this week that I'm not sure if it was the last time I get to see him, but I hope it isn't. But it was nice spending time with him.
It's rough being trapped in one of those bodies. I saw
Yeah.
Michael J. Fox accept a Presidential Peace Award, and he's been in that body for a long time. And
Yeah.
it's really hard to watch.
It is.
Anyway, guys, there you go. Health is wealth, right?
Health
You
is
know,
wealth.
Amen.
Make $1 million and give it to the doctors. What's the difference, right? So take care of yourself. I'm like Mickey Mantle. If I knew I was going to live this long, I would have taken better care of myself.
Hey, I'm sorry, Dale. I hate to say one last
Go
thing
ahead.
before we go.
Go
One thing before we go. I didn't want to, I want to
No,
step on you here. I just
that's all right.
wanted to say, you guys make sure you stick around tomorrow. We will have a really big announcement regarding the trader funding program, especially for those of you that are outside the United States. You'll be privy to it. So just make sure that you're around tomorrow. And I think we're going to be able to announce that. So,
All right.
All right.
Adios, everybody. Thanks.
Ciao.